Welcome to Trading Nation. I am Brian Sullivan. We're joined now by Bespoke Investment Group research co-founder Paul Hickey. Paul, I've said your name 1,000 times. You think I'd get the introduction right. That aside, I'm glad you're joining us. I blame the weather for everything here. Let's talk about S&P 500 performance. It has been nothing sort of spectacular, although there have been better years. Best start to the year in 12 years, since 2006. Are you still a big believer in this market?
Yeah, I mean, I think just because the calendar changes doesn't mean you should necessarily change your investment strategy.
Bingo. It's literally just a number on a piece of paper.
Exactly. So it goes from 7 to 8. Us included, write a lot of research reports on the year ahead. But, rather than forecast, we just try and give an ultimate, basically a blueprint for what is going on right now and how that has played out historically. So until you start to see signs of the economy turning south, which isn't happening, or you see signs that the Fed is going to become overly aggressive and hike rates, or that inflation is going to become a problem, it's hard to get overly concerned about the market and take a more cautious attitude. So like you said, this was the best start to a year since 2006. And from a historical perspective, good starts to the year like we've seen in the first 4 days of last week have generally been good for the rest of the year. The average rest of year gain has been over 11% and gains 84% of the time. And if you look at all other years, the average rest of year return after the first 4 trading days is average of about 5.5%. Positive returns 60% of the time. So it's definitely, historically it's been a good sign, and not just in the long-term history, but even since 2000, every year where we've had more than a 2% gain to start the year, the rest of the year has seen a rest of year return of over 10%.
Wow. And what's interesting also in what people are buying is that if I look on my screens and based on the reports you guys have put out, the last one on Friday, Under Armour, GE, stocks that were crushed last year are some of the best performers this year. I know it's super early this year, but what does that tell you about anybody's buying strategy? It's a dumpster dive.
Yeah, so like you said, the 20 best performing stocks as of the end of Friday were down a median of 11% last year. So it's basically what it's telling you is that investors are buying anything that hasn't already rallied, just in hopes of catching a move higher. Winners have been doing well. The losers have been doing well. It's the stocks like, the middle child syndrome. They've been performing the worst so far this year. And so like the middle decile of stocks as far as performance last year are barely up this year. But the best and the worst performing stocks are have done, among the best returns so far this year. So
Marsha Brady's out, Cindy Brady's in, and Jan Brady just continues to get ignored, much to her chagrin. You think that's a trend that's going to last?
I think you're going to continue to see, one of the things we're looking at, we think tech will continue to do well here. We like the energy sector, which is one of the reasons for you've seen some of the poor performing stocks from last year do well, because that was one of the poorer performing sectors last year. But they're really going to stand to benefit a lot from the tax reform. So they pay some of the highest effective tax rates. So moving their tax rate down will be a benefit, should be a benefit for the sector. Plus, oil is over $60 a barrel.
All right, Paul Hickey, Bespoke. Paul, always a pleasure to have you on Trading Nation and CNBC. Thanks very much. Really interesting stuff as well.
Thanks again.
Folks, as always, thank you for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.